Hello guys, and welcome to my YouTube channel once again. So in this video I want to show you how you can always get a very high probability setup using the strategy I've been sharing with you recently, especially about the candlestick sweep, where I think I told you it's called the candle range theory in SMC, something like that. All right, so I want to show you how you can use that to trade the boom and crash and even the volatility pairs, how to get a very high probability trade setup so you can make some good profit. All right, so what you do is this particular strategy, it makes most sense if you can find the setup on a daily time frame. All right, although I use the same setup to get the entries and also trade on lower time frames, but if you want to get a very high probability trade setup, it is best you find the setup on a higher time frame. You can do that on the daily time frame. Excuse me. You can do that on the 4 hourly time frame. You can find it even on the 1 hourly time frame, but I usually like finding it on the daily time frame and on the 4 hourly time frame. All right, then okay, so the first thing you would have to do for yourself is just go to your MT5, try to add all the pairs in your quote. Just add all the pairs. The reasons for adding all the pairs is because if you have only a few pairs you trade, like let's say 3 pairs you trade majorly, you might stay for up to a week without finding a good setup, or you must stay for a couple of days without a good setup to trade. And to avoid you taking wrong trades, if you are not able to wait patiently, you can just add all the pairs you have, add them to your quote. Then you can be going through each of them every day to check which one has the setup, whichever one has the setup. Then you stick to that and progress with the analysis. All right, so the first thing you do is to add the pairs to your quote. Then when you come, for example, this is boom 500, you can see boom 500, yesterday's candlestick, yesterday's candle, you can see it swept the current the previous 2 days candlestick. Look, and you can see the wick here. It swept the yesterday's candlestick. The wick swept this other wick and it closed here. So the market did what? It sold first. The current day's market sold first and then started buying. You can see it started buying. All right, so that is just it. Once you find this sweep, this thing happening on the previous day's candlestick, then you go down to a lower time frame to watch out the kind of structure you have on the current day, to see if there is a possibility, or if you're going to find a setup that is in line with buying, setup that indicate the market will be buying today. Then you know it's in line with what you find here. Then you go in, wait for an entry and take your trade. All right, so as you can see here, what the market did initially, the market closed right here. Yesterday's market closed up here, but it had to sell first down to this level before it starts buying. Now if you go down to the I just want to spend a little time here to explain something. If I place my horizontal line right on the wick of the previous 2 days candlestick, which is this bearish candlestick, then you can see the market, the current day's candlestick started forming at this point. Then it sold down to this point, and if you go down to a lower time frame, you will see that on the, let's say on the 15 minutes time frame, you see the structure the market was creating that indicated it was going to buy. What structure is that, guys? You can see the structure. You can see the lower highs and the lower lows at this point. Where is that red line to? Okay, you can see the lower highs and the lower lows the market was creating. And also you can also see that the market at this point tried to create a kind of a head and shoulders pattern, inverse head and shoulders pattern, which we would call this the left shoulder, this is the head, and this is the right shoulder. Then the market broke out of this trend line, sorry, this neckline at this point, and retested, and you can see the buys. You can see the spikes, and the market bought nicely up to this level. We know, based on what we've seen, the market could continue buying. All right, so even if you are able to catch just this spike, you know you make some reasonable profit. Even if you're able to catch just this spike from here to here, guys, you'll be able to make at least $100 in a day if you have a reasonable account size. High probability setups like this require you to put in use reasonable lot sizes or open multiple positions so that you can just make the most out of it. You don't need to hold trades for long. You don't need tens of spikes before you can make hundreds of dollars. You just need a good account size and a very high probability setup just like this, and you're out of the market, maybe for the day, or maybe for that time till you find another setup. All right, so that's just this for boom, 500. I'll want to go to another pay to also check so you can learn. All right. So okay, this is a volatility 50 index. Volatility 50 index. All right, the setup is not valid because yesterday did not sweep previous day's candlestick, so we can't get anyone there. You go to crash 1000 index. Crash 1000 index, there was a sweep. At this point there was a sweep, and one thing I want you guys to also take note of, make sure this thing happens where we have a resistance zone or a support zone. It works best when you have a resistance support zone around that area. Like right now, you can see that this the previous day's candles swept this low, this one here, but actually this doesn't look like a strong resistance zone. Although looking at the structure we have here, we can easily draw a trend line to say, okay, this is our support zone. Supportive, this is a support. The market is on the support, you understand? But you can see the market had to sell first to this support before it started buying. So it's just similar to waiting for the market to get to the base, to the week, this particular week here, and from there you look out for the price action. Just look out for the price action that indicates the market is going to buy. Then the market will most likely buy up to this level here. Then you can take profit, or you can even buy more above that level. But you have to also take note of the structure the market is creating. If Because from what we can see here, it looks like the market would want to be breaking to the downside, but currently the market might just buy then come back to break to the downside. So you have to check when once you find this sweep. So in this case, or the best thing you would do is this: once you notice the market is forming a structure that indicates the breakout to be going to the downside, you only look out for the sweep at the top. Look out for the sweep that happens at the top here, at the resistance zone. If the sweep happens at the resistance zone, anyway somewhere around here, then it's better you know that you are safe. You know that you are safe than taking a trade around here. You understand? But even taking a trade around here, they still guaranteed the market might want to buy. Then if it can break above this zone, it can touch the trend line again before coming down to sell. But trust me, from this structure we are seeing here, the market will later want to sell to the downside. The market will want to sell to the downside as a continuation, as a bearish continuation. All right. So once you go open a chart, open a pair, then you feel confused, you're not too sure of what the market is doing, you skip it, go to the next pair, go through all the pairs, just quickly go through all the pairs. Okay, we just checked boom 500, this crash 500. You check what do we have, the guys. Look at what happened here yesterday on boom 5 crash 500. The market has been selling, and yesterday's candlestick swept the high of the previous day's candlestick. And you see what happened, the market only had to retest this zone, this zone here, which is the week of the previous 2 days candlestick. And what happened, you can see the sales. It is selling. It is selling. If we go to, so what you do, you go to a lower time frame, go to maybe the 1 hourly time frame or the 15 minutes time frame. Look out for the price action that is happening there. This is the 1 hourly time frame, guys. All right, so you can see the market did what? It created a kind of a head and shoulders pattern. You see this is the left shoulder, this is the head, and this is the right shoulder. And also remember that what we are having here is a structure that indicates the market to be breaking out to the upside. But remember that there's also a strong resistance zone here that can stop the market from buying. What I mean is this: in case you didn't notice that resistance zone, you will want to draw a chart pattern, or your trend lines, something like this. You might want to draw something like this, and at the end you're thinking that it is broken out, then you will lose. It means you don't know how to draw the trend lines properly. Besides, the real drawing of the trend line should be something like this. It should be something like this, or even something like this. Draw just touching the wicks. Let's wait for the market to break out of the wicks, the candlestick to break out of the wicks, then you confirm it is selling. So do not allow these lower highs and lower lows here to confuse you to think the market is going to break out to continue buying. All right, from what you've seen on the daily time frame, you should have an understanding that the market will be selling. The market will most likely be selling. So look for sell opportunities for this once you find that set up on the daily time frame. So you can see the market sold nicely, and it's massive profits, guys. Just imagine you are opportune to find this entry, even if it's up at this point. Then if I use 3.0 like I would use on some of these pairs like this, I can use 2.3.0. This is $260, guys. Clean $260, guys. All right. So you just need to go through different pairs. Now we've looked at about 3 pairs or so. Let me check another pair. Boom 1000 index. All right, boom 1000 index. As you can see, yesterday's candlestick did not sweep. The wick did not sweep the wick of the previous day. As you can see, the wick of the previous day is covered by the body. Excuse me, please. Excuse me. Is covered by the body. You can see the body of yesterday's candlestick covered the body of the wick of the previous 2 days candlestick. So there is no wick sweep that we want to consider actually. So for that reason, this is not valid. This is not a valid setup for that strategy. So you jump to the next crash 900 index. Okay, this one is the same thing. It did not happen, so we won't get an entry for that because the market had already, as you can see, the similar thing happened here previously. You can see the market swept this low before starting to buy, then came back again, continued buying. So you just have to check the price action. Well, the reason you have to go down to lower time frames to check the price action is because what you may see on a higher time frame might make you feel the market is actually ready to go your way. But when you go to a lower time frame, you would see that the market is creating structures that indicate it might want to go the opposite way before coming to go the actual direction you expect it to go. So when you go down to a lower time frame, you will actually find that, and you know from there, you're able to determine if the market will be going your way immediately, or you just wait for it to give you a good structure that indicates it's going to buy it. Like for this one, you look for maybe a double bottom, inverse head and shoulders pattern, impulsive correction, bearish impulsive correction that indicates it's going to break out to buy, stuff like that. Or maybe the candlestick entry stuff strategy, which I've been teaching my students are aware of that. So you just look for those confirmations before you go into trade. It's a very powerful strategy that works for almost all tradable pairs. All right. Okay. So this one here is this okay, this one, the yesterday's pair. Let's look at the yesterday's candlestick. A closed bearish at this point, and there's very little wick. If you can look closely, I think this is the highest I can zoom this chart. So there's a very little wick sweep here at this point. Usually you would expect the market to sell to the downside, but trust me, if you go to a lower time frame to check for the sales excuse me, to check if the market was going to sell, there will be no confirmation that the market will sell. That is why I tell you have to go down to a lower time frame to check the structure of the market to confirm that the sales is going to happen. If it happens, then you go in and make your money. You understand? So you can see the market just bought the new day's candlestick started to buy immediately without any little sales activity, just bought immediately. All right, so even if you go to a lower time frame, you won't find a setup that indicated the market was going to sell. So you hardly lose with this strategy, except you do not understand simple price action. All right, then you can also always find it on all pairs. Just go through all the pairs. Go through all the pairs. Keep on going to any pair that you see that doesn't give you what you want. Skip it. Go to the next pair. Go to the next pair. Do not be influenced by a choice of pairs to trade. Or if you have a particular type of pair you feel you should only be trading, then you wait until you see that setup on that particular pair before you trade. Like imagine, look at this we have on this V75, okay, V51s. We have this on V51s. You know, if you understand trading, you know that when the market sold here and started doing this and started coming back again, you know the market is coming back to create a double bottom. So at this point, while creating the double bottom, you see the market came down, swept this, and then you see after sweeping this, the next day's candle started buying immediately, started buying. Now your question would be, if you had marked the zone, you marked this the week of the previous 2 days candlestick, the market didn't come down there. Okay, even if the market did not come down here, but trust me, you will find some price action setups that will confirm that the market would want to buy from where it is and would not come down to this zone. That's why you need to understand price action. By the way, you can still see this. Look at this. if market created a high here, this is a lower high, this is a lower high. So for the market to move above up to this level means there is a breakout and there is a retest somewhere here. The market has broken out and retested before you see these massive buys, and you can only find this on a lower time frame. Maybe the 1 hourly time frame will explain this better. All right, so you need to try to understand some of these things to help you succeed in trading. But trust me, if you find any confusion on any pair you open and you try to do this, and you are wondering if you should enter the trade or it's gonna, don't just skip the particular pair, go to another pair that shows you a good setup that that will work for you. All right, that will give you profit. That is why I said add as many pairs as you can on your quotes, so you can just go through them. It doesn't matter how long it will take you, but trust me, it can take you up to 30 minutes to find a very high probability setup. If you can spend 30 minutes to find a very high probability setup on your from each of these pairs, then you find one, that particular one pair you found, then you follow it up from a lower time frame, get your entry, and you see, trust me, you're going to make some good profit. You're going to make some excuse me, you're going to make some good profit. All right, it's better than just jumping to the chart and trying to make money with that proper analysis. All right, so this information I'm sharing with you is very powerful. What is left now is for you to make use of it and make money. I want to see testimonies that you've made money from this information I've just shared with you. It's a very powerful one, guys. All right, so there's a link in the description of this video. Click to join my Telegram channel, and I just hope I'll